I am the Jackie Jackson. I'm a full-time real estate investor, and I love teaching and sharing positive information of how you can be a real estate investor too. Whether you've never done your first deal and you're just getting started, or you are a master and you've done multiple deals and you're looking for new ways to diversify your own profitability. I'm your girl, the Jackie Jackson. I talk about creative real estate investing. And today we are going to be talking about tax deed surpluses today, tax deed surpluses. So I have received so many calls, so many inquiries, so many questions. You guys are all up in my DM, all up in my inbox, and I love it. I love, love, love it. So anytime someone wants to reach out to me, please, you can go to my website. It is thejackyjackson.com / I think booking with Jackie. The link will be in this video right here. So feel free to book a free consultation with me, and I would love to chat with you and help you get started. Anyway, so today's video is all about tax deed surpluses, okay? So tax deed surpluses, what are they? Like, what is a surplus? What is this overage? What is this overbid? What is this excess money? And I am lovingly sharing all the different names that it's called, because from one county website or one state to another, it may be called something different, right? So we have overages, we got surplus, we got excess funds, we have overbid funds. All of them are synonymous with each other, and they all mean the same thing. Okay, guys? All right, good. So we got that clear. So it's really important for you to understand how it's actually created. So during the competitive bidding process, right? So that means you, me, other investors, we want the same property, right? So we may be participating in the same auction, and we may be competitively bidding during a premium style or premium method auction, which means that the auction is based off of who is going to pay the most. Who is going to pay the most? The opening bid for the auction that the county wants to collect is the total delinquent taxes, okay? So the county only needs the total amount to cure the delinquent taxes that the property is being sold for, right, at the tax deed auction. So anything above that is considered a overage or a surplus. Got that? So quick math. If a property sells for $10,000 and the opening bid was just $2,000, which was the total amount for the delinquent tax, 10,000, 2,000, the difference between them is $8,000, right? That would be the overage. Now, who actually is eligible to collect this overage, and what does this mean for real estate investors? Like, why is this even a thing, or why is this even like important, right? So you have real estate investors that actually have formed surplus recovery companies, right? Surplus recovery companies. No, it's not just real estate investors. You have real estate attorneys. You have non-real estate attorneys. You have a lot of different fee finder companies or surplus overbid recovery companies that are actually assisting the previous property owner in collecting this overage. Why? Because the previous property owner is eligible to claim these excess funds, these surplus monies. So you would say, okay, well, why would they need like a recovery company to assist them in claiming? Because they could probably just claim it themselves, right? Well, the answer is yes, they absolutely can claim it themselves. The challenge is, A, they normally don't know where to go. And when I say they, I'm talking about the previous property owner. They normally don't know where to go or where to find a paperwork to submit to the county in order to actually get access to the surplus. And they normally also are unaware that a surplus was actually generated on their behalf, right? And this money, this pool of money is just kind of sitting there. And later in this video, I'm going to show you a perfect example of surplus money that's sitting with the county, one of a very large metropolitan here in the state of Florida. I'm just going to show you their surpluses that they currently have on their books right now. It's really, really interesting stuff, okay? So not every state allows surplus recovery companies to assist, all right? So not every state allows overages to be collected. So the whole gist of this particular strategy is that you're going to help a previous property owner who lost their property to a tax deed sale, and in some instances, maybe even a mortgage foreclosure sale, right? Because mortgage foreclosures is also a competitively based auction, and overages also can be generated with a mortgage foreclosure as well. But in this instance, we're really talking about tax deeds. Anyway, so the whole gist of the method is for you to contact the previous property owner, try to find them, contact the previous property owner, and then present yourself in a trustworthy manner, right? Also have them agree that you would represent them with the county. And then you're going to fill out the paperwork, right, to become the claimant on their behalf, their agent, and help them claim the funds. If you are successful in doing so, the county will issue the funds to you. And then what you would do, you would deduct your fee, of course, for your service. And then you would distribute the difference to the actual property owner, and then everybody's happy in these instances, okay? So remember where I shared with you, not every state allows fee recovery companies to actually provide that service. So what I'm going to do is share my screen with you, Jackie Jackson style, because you know I love to just give you the goods and give you exactly what it is. You know, I'm not going to sugarcoat it or anything like that. You're gonna get the real deal from me. Fair enough. I'm a full-time real estate investor, and there's no fluff here. So you know, I'm not trying to sell you a program. I'm not trying to do anything like that. There's plenty of other people out there that's going to do that for you. I'm really just trying to educate you, okay? So take a look at this stuff here. So I'm about to share my screen with you right now, and let's see if this works for us. It does. All right, cool. So I'm sharing my screen with you guys right now, and this is normally something that I would share with my current students, okay? So this is normally something I would share with my current students, but I decided to just kind of share it today because you need to see it. So what I've done and why my students are so successful is because I have researched every single state within the United States, not just the surplus, but overall in general regarding the tax deed and tax lien investing strategy. I research every state, I research every state's laws, and to determine like what's applicable. What strategy can you use in, the different states that's going to bring you the most success? So that's the reason why I'm sharing this information with you all, so that you can see the due diligence and the care and the level of detail as an investor that I implement in order to help other people be successful. And that's why I have students in multiple states, because I am able to speak intelligently about what their state is doing. All right. So where we're talking about today, we're talking about surpluses, we're talking about overages, and we're talking about like what states allow you to invest in there and, create a recovery fee services and which one doesn't. So the way how this actual cheat sheet reads is that, of course, the states are identified here in column A in alphabetical order. And then in column B, it'll actually identify if the states will allow a surplus company to provide services or not. And then, of course, never take my word for it. I don't even take my own word for anything. I go and I read the law. I go and I read the law. I go and I read the law, the statute, the law. I don't know how else to say it. Go and read. And that's one of the things that you guys refuse to do. Oh my word. I love y'all so much, but y'all just want to, jump to the end, and anybody want to read the rules of the game. Anywho, so what I've done is I have actually researched all of the surplus laws regarding distribution, right? So for example, if I clicked on, let's click on a state, let's do Alaska. Here we go. Let's click on Alaska for a second. Bam. So here's a perfect example of what I've done. So you click on Alaska. Alaska does allow for surplus recovery companies to assist property owners. And here, when you click on the link, it's going to take you directly to what their provision in their state statutes discusses about proceeds of the tax. So that's really how this spreadsheet works, which is really, really cool. So all of my students have it. If you're looking to invest in this type of business and you really want to start this and really, really be successful, my students have a whole slew, like a whole portfolio of tools. They have all their documents, they have their power of attorneys, they have their agent agreement, they have their script, they have, they have quite a lot in order to make this work. And I'm pretty sure that's why you guys are watching me right now, because you know that I always give all of the goods, all of the information. So this is just a real quick snapshot of how deep that I go in making sure that you absolutely win. Now, I did promise you that I was going to go to one of the local counties here in Florida, and I was going to share with you exactly what kind of monies are available out there. Now, isn't this interesting? Okay, so this is Broward County. This is like Fort Lauderdale, Florida. And as you can imagine, Fort Lauderdale, it's a pretty amazing city. And in Broward County is a pretty amazing county as well. It's one of the 67 counties in the state of Florida. So I'm actually going to make this a little bit bigger so you guys can see it a little bit, hopefully. All right, cool. So what I did is I just went to Broward County overages. Why? Because I just wanted to show you what it is. I just want to show you how much money is out there. So if you're looking at this right now with me, obviously these are the first column is going to be like the tax deed number. So these properties already went to auction, okay, in Broward County. And then the sale dates is right here too. So you know that, I'm not making this stuff up. So here are the historic data of available surpluses just in this one county. Okay, guys, it is billions. And I would, even kind of cautionary say trillions of dollars that are sitting with the counties like uncollected. It's scary, right? So here's a tax deed file number, the parcel ID for that particular property. Then you have like a homestead status here, which is like an exemption. Then you have the actual sale date. Oh, and by the way, I just wanted to clear something up with you guys. You guys keep asking me, how has COVID impacted, tax deeds? Are there really any auctions? The answer is yes. All of this right here is COVID time and auctions were happening. So yeah, auctions are still happening in like every county USA. Taxes are still going to be collected. Okay. So yeah, COVID hasn't changed auctions from not actually taking place, at least in the tax deed and tax lien world, it has not. All right. So here is the opening bid. As you can see in this column here, some are higher than others. It's just based on the total amount of taxes that are due, as well as, a combination of different things. And then on, in the column where it says winning bid, that's the high bid, right? So you have some investors that have competitively bid these wins up, right? So if you take a look here, just the first one, I don't even know why this dude right here paid $300,000 for this property. That's ridiculous. I would have to go back and like take a look and see what kind of property. Maybe this is $1 million property. I don't know. So it may have made sense, mathematical sense and investment sense to pay this amount. But anyway, as investors, we actually or should be calculating our maximum win prior to starting participating in the auction. So we know how much we're going to go up to and maintain profitability. So just looking at this, it may look like high numbers, but at the end of the day, we would need to cross-reference and take a look at the comps, take a look at the properties. There's $1 million properties in Broward, so I don't doubt that this is possibly just one of those properties where, hey, if the property is worth $1 million and he bought it for $300,000, hey, he had $300,000, so be it. But he still bought it for 30% of or 30 cents on the dollar. Does that make sense? So we go by percentages. So don't necessarily look at the numbers, but I digress. So here's what I want you to pay attention to. I want you to pay attention to this column right here, because we're talking about surpluses today. Oh my God, 256,000, 64,000. Well, this one's a baby one. 45,000, 5,000, 212,000, 91,000, 45,000, 12,000, 5,000, 8,000, 191,000, 28,000, 102,000, 9,000, 4,000, 17,000. Oh my gosh. Let's go to the next page. All right. So, oh my word. Check this out. 36,000, 58,000, 119,000, 181,000, 51,000, 35,000, 8,100, 7,700, 4,000, 6,000, 20,000, 28,000, 373,000. Oh my gosh, you guys, like it's all here. And this is one county USA. 1 out of 3,141 counties. And I know you're like, oh my gosh, Jackie, but you just told me not every state allows surpluses. So be it. But guess what? After we make that subtraction, from the states who does not allow you to create a fee finder or recovery surplus company. There's plenty more states where this came from. So the states that do, I'm gonna need y'all to get up on it. All right. So if you really want to know how this process works, how are investors being successful, all you need to do is just drop me a line and I will follow up with you. We'll set up a consultation. We'll talk about it and I'll explain the good, the bad, the ugly, the pros, the cons, what you need to watch out for. How difficult is this strategy, right? Why is it that surplus goes uncollected? What is that like roadblock? What is that, thing that people are just not collecting their monies that are available to them? I mentioned two reasons earlier, which is A, the property owner does not know that these funds are available to them. And then C, they don't know where to collect it. Because guess what? The monies for surplus is not hanging out with the state's revenue. You know, that whole uncollected funds where when you close out a bank account or some kind of insurance policy, and then those financial institutions surrender those monies to the state. Yeah, that's not where it is. So you can hunt it down all you want. That's not where this money is hanging out. That's not where you need to go in order for you to collect it. You know what I mean? Okay. So that's what I'm saying to you guys. Anyway, so it was an awesome opportunity to share with you guys. And I just want to let you know, as far as like the list of possible entities, claimants that could actually claim these monies. A, if there was a previous mortgage on this company, that mortgage company also has eligibility to claim. If there was a previous lien holder on this property, like a code enforcement lien or any type of government lien or any type of junior or mechanics liens, those entities also are individuals that have encumbrance on the title prior to the tax deed sale are also eligible to claim, as well as the property owner. Okay. But if there was no liens, if there was no mortgage, if there was none of that, then the only claimant eligible would be the owner, their successors, or their heirs, or their personal representative of their estate. There's no way to know that unless you actually do your research or you have somebody to hold your hand to show you which ones you need to like focus on and which ones you're like, okay, let time heal all wounds, and then you come back to that one. Fair enough? Anyway, awesome pleasure. I love sharing my screen with you guys and educating y'all. Just hit me up on my website, thejackyjackson.com, and then you can always book a strategy session with me, consultation, and that's pretty dope. And I look forward to talking to you guys. I will see y'all next week. All right. So I'm out. I'm about to fill out some paperwork because the brow would look real juicy. Anyway, I'll talk to you guys soon. Talk to you. Bye.